the banking industry put aside $60 billion in anticipation of a big credit crisis due to COVID, and it didn't happen. There was very little credit impact on U.S. banks last year. There's a lot of reasons for this, but bottom line is we didn't need the money. So now we're taking those reserves back into income because the accountants won't let you leave it there. And as a result, income, dividends, share repurchases are all going to snap back to where they were back in the first quarter of last year. The year-over-year comparison to the second quarter is not useful. You really should look at first quarter last year, 2019, when you're trying to set your benchmark, set your run rate going forward for U.S. banks. So that's really what's going on. It's part accounting, and it's part just that they didn't need to keep those reserves aside for a crisis that did not happen.
Okay. So if I've got $1,000 in a savings account at a local bank, and I have $1,000 hidden away in a cookie jar in my house, and I take the $1,000 out of the cookie jar and I put it in the bank, and I come home and tell my wife, honey, I just doubled our savings. I really didn't, right? I just kind of moved the money that was hidden to the bank where it's sort of, quote, official. Is that in a very rough way, obviously, Chris, kind of what's happening?
Correct. The money never left the bank. It was put aside for a rainy day. It didn't rain. So now we have the opportunity to realize last year's profits now. That's the way you should look at it. If you back that out, that'll tell you what the industry is doing in terms of actual run rate revenue earnings this year.
Yeah, the cookie jar, I guess, is a proverbial one that's instead laying on a bank's balance sheet. Goldman Sachs, very quickly today, obviously huge in trading. Goldman, like with Archegos and others, always seems to kind of win. Do you think their fixed income, currencies, and commodities trading is going to be huge? What exactly are you looking at from Goldman Sachs with the stock that has doubled in a year on relatively flat revenue?
Well, all of the banks, Brian, have run up 50, 40, 30%, depending on who you look at. Wells, I think, was the best, based upon the expectation that eventually income and dividends would go back to normal. And that's what we're doing now. Goldman, I think, if you look at Jefferies last month, should have a great quarter. They are kind of in that same business in terms of the transactional side. The bank side, it's not going to be much for any of these names because rates are falling and spreads are falling. So it's about spreads, not rates. And unfortunately for banks, lending is flat. There really aren't a lot of opportunities to build or retain assets right now. But I think Goldman should have a great quarter. This is their environment. They like this kind of environment. Change, dynamic, volatility. Yeah. That's what they do.
Yeah, we showed Jefferies very quickly. Jefferies, Rich Handler and company, they're a very unique model. Is Jefferies maybe the one, quote, bank or broker-dealer that we must watch the most closely? It doesn't get a lot of press.
Well, it doesn't go on the calendar year. They're a month earlier. So if you want to know how investment banking is doing on the street, and they are a broker-dealer, they're not a bank, you always look at Jefferies.
Shepard Smith here. Thanks for watching CNBC on YouTube.